Go to Kiana Danial, the Diva CEO, cryptocurrency investing for dummies. She was on this when nobody was. So it's a natural time, Kiana, for me to get your read on what you see happening now. Is this falling out of favor? Are the problems right now with Coinbase, the exchange for all of this, laying off 80% of its workers, or Celsius forbidding selling in this environment, adding to fears on the part of investors, many of whom just want out?
Yeah, absolutely. Good to be back here. And here's what's happening here. We have cryptocurrencies, we have the stock market, we have inflation, we have so many things going on at the same time. And the Celsius, all the stablecoin, the situation that is going on there, I think it has less to do with my overall long-term view on major cryptocurrency assets. That was the reason why I got into this field back in 2016 in the first place. Bitcoin, Ethereum, things that are actually making moves and making changes in the longer-term view in this new asset class. And then, of course, though, because all these other companies that are taking the hits because of the stock market, like Coinbase, like Celsius, now Bitcoin is getting drifted back down. However, Bitcoin is volatile. We've known this from the very beginning. And if you look at the chart right now, and it is interesting because the last time I was on your show, we talked about the break below the 28K level. And the moment that happened back in May, I set my balance orders to buy more Bitcoin at 22K and then at 11K. The first one went through last night, the 2 nights ago when I was asleep. And now I'm looking forward to purchasing more of these asset classes as they drop. Why? The reason why is that some of these, and I'm not saying that you should do this, obviously do your own research, but we are in tough times right now. We're getting a double whammy with the stock market and inflation and the crypto market at the same time. So you might want to take less risk when it comes to choosing your assets in the cryptocurrency market. That's why I'm going with the bigger names, the ones that I actually have a longer term plan for as a value investor. And once you do, this should be your lesson learned. Do not keep your crypto assets in somebody else's wallet, not your keys, not your coin. We saw this. People are getting greedy.
But,
with
Celsius. I understand that view, kind of, but a lot of people keep their assets in the New York Stock Exchange and the NASDAQ. Now they come to find, with some of these crypto exchanges, their money isn't so protected, and that's sort of reigniting fears. This isn't only the Wild West, this is the stick it to me West, and I don't like it.
They're not as regulated. That's why you need to have your coin.
And I get that, but don't you see that this is has the potential to burn investors, especially if they can't get out of Celsius or they're locked out of trades, that sort of thing, that this will just feed a narrative that this is what you get, plunking your dollars down in a risky investment. What do you say?
Well, I say you probably got into all of these assets because you heard something on Twitter. When you go to cryptomistakes.com, I've been telling you, go to cryptomistakes.com, avoid these 7 deadly mistakes before you get into crypto. Number 1, not calculating your risk tolerance. Elon Musk said so is not an investment strategy. Just because somebody said, oh my God, 20% yield, that is not an investment strategy. Actually go and read that white paper. Understand why you're getting into this. Understand how much cash those companies have that are offering you this yield before getting into it. I don't want to be the I told you so kind of person, but sometimes these are lessons that need to be learned. I got into investing, and I'm a former Forex trader. I started out in 2008. A lot of lessons learned throughout these times. And cryptocurrencies have not yet been through a recession. But let this be a lesson that do not get into a position without actually understanding what it is and how long you're going to be in it. If you don't have an emergency fund, do not invest in it. If you don't understand it, the previous reporter was saying Warren Buffett would not get into cryptocurrency. You know what? Good for him. Why? He's over 90. He doesn't understand it. Don't get it. Don't get in. That's fine. Understand it first and then create an investment strategy.
One thing I know about Warren Buffett, it's one thing not to understand the investment, but it's another thing to not trust the investment house in which you can play it and trade it. He trusts the New York Stock Exchange. He trusts NASDAQ. He trusts some of the other major exchanges. He seemed to have doubts about the structure around this. That might change, to your point, Danielle, but I think that's adding to the fears, right?
I don't think Warren Buffett is going to change because he's built a legacy. Trust is built. He's built trust in things that he's been familiar with for such a long time. I don't think at his age.
Well, that's what
it
makes
is
it. That's what makes him a
much
sage. That's what makes him a sage. You know. So we'll watch it. We'll watch it very, very closely. In the meantime, keeping an eye at the corner wall and broad, where traditional stocks are having a good day.